Welcome to Bears in Exile. Today is Wednesday, December the 12th, and this is the market overview. Looking at everything that we look at every single night. And this is around about the third to the last regular market overview video. So just counting it down. Really awesome day in the market today. We finally have something that looks like it might be a promising setup, at least in the very short term. So anyways, I will get right to it. So today was the FOMC meeting, which we knew was coming, of course. And the markets, of course, just jubilant and up and craziness until after Ben stopped talking, and then it just fell down. Nothing too spectacular. Dow down almost 3 points. So really just flat. But it's the structures which are really important tonight. Really interesting. So we have the descending channel. Talked about it last night. We said last night that they had painted the charts to look really, really good. And they did, of course. And we were wondering what would happen after the Fed did its magic, and sure enough, it was magic. They're printing $85 billion a month now, but we ended with an inverse hammer today. Very nice, at the top of a very possible range. It pierced the upper channel and fell back. We have a definite topping area in the heat map. We have lots of things attempting to roll over. The CCI, stochastics, the MACD histogram. So we have more negative than positive with a really nice candle here. So the question becomes, all right, do we roll over? Well, most people would say yes. We're going to have rollover now. The Fed shot all of its ammunition. They're out of options. There's nothing else to look forward to beyond the fiscal cliff either getting resolved or not. And anyways, so what would we be looking at here? We would be looking at a secondary reset. And in some of the past videos we've said, time is running out for the bulls in regards to some of the indicators. This looks like the beginning, very, very early beginnings of a secondary reset. Now, for the bulls, it's good and it's bad. It's bad in that there should be some kind of a pullback, which you could call today somewhat of a pullback since it was way off of its highs. But beyond that, we have the 14-day RSI moving average still moving up. That's not going to be turning anytime soon, most likely. So reset to midpoint. I don't think it's going to reset all the way to the bottom, but reset somewhere in here, and then turn and finish out the move to the upside. Immediate term should be some pullback of some sort. Do I trust it for too long? No. And where would it take us? Well, that's a little bit harder. I mean, at its most extreme, it should take us to the bottom of the descending channel line, which would be about 1,300 or slightly less. So just a couple hundred points. That's what the extent of it should be, and really could get caught before that point, maybe at the upper price consensus level, which is just shy of 13,150. And it doesn't seem that great after that, does it? But that is what I would be looking for. Unless they say no fiscal cliff deal, in which case all bets are off and it's going all the way to the bottom, in which case they'll be a lot uglier. But anyways, going on to SPX. Very nice. Almost a gravestone doji. Top of range. Excellent. And not as much rollover as the Dow, but I would consider it to be enough. Very nice topping area in the heat map. Stochastics heading down. They're normally one of the first to go. And CCI and RSI right on the edge. Everything else still applies to the Dow. applies to SPX. So nice setup. In this case, it would take it down to about 1410. So that's what I would be looking for. And maybe everything would change at that point and we'd have to reevaluate. But for the moment, that's what I would be looking for, which essentially would be a down tick and a bubble corrective move. Going on to the VIX. Yeah, VIX had a decent day. It is a fat body spinning top. We still have a bottoming area. The 14-day RSI moving average now has ticked up. This is a first day tick up on the 14-day RSI moving average, so we should have more movement to the upside on the VIX. I guess I would assume that this would be going back to the 200-day moving average once again, maybe slightly less, but that would be the target. And just needs more development as well. But very, very preliminary. Going on to TNA small caps. Had an extremely positive day yesterday, breaking from the this sideways line. I would like to see it go back into that. Today we have a bullish engulfing candle, completely engulfing the upper shadow, the lower shadow, and the real body of yesterday. Very, very nice. Just barely getting underway to the downside with a first day downtick on the MACD histogram, the RSI, the CCI, and not the stochastics yet, or the 14-day RSI moving average, of course. So very preliminary. We do not have a downtick. Can they pull a rabbit out of the hat? I suppose it's possible, but it definitely does not look encouraging at this point. Downward target of this would be 58 and just shy of 56. Going on to UUP, the dollar. Ah, look at that. That also makes sense as well now, doesn't it? When the dollar goes up, the market should be going up. It didn't go up today. It went down, but it is a beautiful hammer. Beautiful. So even though we have everything for the most part still pointing down, we do have a darker blip in the heat map today and a very nice reversal candle. A retest of this support resistance line would be completely natural. I mean, we gapped it yesterday, which is unnatural and not healthy. You notice that it filled this gap here today from yesterday to today, but we still have this gap up here, which also needs to be filled. So move up through that, piercing it, etc. I don't know about closing above there, below there, or at there, but this would be a natural move. Natural move. Going on to GLD. Yeah, not so great. Spinning top. Outside closing below the long-term moving average bars, which are not formed. Downtick on the 14-day RSI moving average, and losing momentum in everything else. So this, iffy, but definitely unhealthy. I don't like this one bit. Nope. And SLV, which has been stronger than gold by a good amount lately. And it ended today with a spinning top. Yeah, at least it was green. Everything for the most part is still ticking up, so this still looks much better than gold, but we are starting to build a topping area in the heat map. Very preliminary, but it is there. We do have support still below us, unlike gold. So, yeah, this looks a lot better, but it should get dragged down if gold tanks. CompQ, the NASDAQ, yesterday had a very nice day, gapping above the lower ascending trend line, piercing the upper ascending trend line. A very, very nice move, but we noted the heat map starting to register a topping area. It was the beginning, continues on today. Today losing the upper trend line, which is definitely bearish, making a new recent high, which normally is bullish, but just getting pushed away from it, not a really good sign. And most things at least attempting to tick down. The fast stochastic has not turned yet, and of course not the 14-day RSI moving average. But definitely overall, not a good sign. And Apple. Kind of a no-nothing day. We still have 3 days to complete our uptick target. Up here just shy of 560. 14-day RSI moving average still moving up. And everything else down and up and mixed and not telling us much of anything. Even though this is bearish engulfing the real body of yesterday's candle, I'm not overly concerned about it since we still have a target up here and a bottoming area developing down here, and we definitely have some support over here. I suppose it could be broken, but at least there's some at the moment. I'm just not overly concerned by Apple at the moment. No, a lot of people are really bearish on it at the moment, but I'm not that concerned about it. GE, trying to get a better read on the Dow. Now here's something that is telling us something different. We have a new recent high today. It's not a red candle. It's not closing at the lows. It's just outside the upper Bollinger Band. We're starting to get a little bit of a topping area here, but yeah, most things are still pointing up. This definitely looks better than the Dow itself, which would suggest that maybe it will attempt to be caught, and we'll have to see how the market reacts to that. But yeah, this definitely is the odd man out. So interesting. And going on to JP Morgan, most important bank. Look at that. Very nice. It's a inverse hammer, maybe a shooting star, top of a possible range. We said yesterday we were curious what would happen at this point. We pierced it, but we did not close above it. And it looks like it wants a rollover. We noted the topping area in the heat map, so it would be really natural for this to get a downtick and move down at least for a couple of days. You can notice the extension in the short-term moving averages. It is too wide. We don't have wobble though, so it's not perfect, but definitely there is a bubble here. Not a good sign. And XLF, the financials as a whole. And this time it actually did catch up to JP Morgan. It did not yesterday, but today able to pierce its recent high, and it is not healthy looking at all. Excessive separation in the short-term moving averages, and it does have a topping area that has built up, but we don't have as much rolling over here. Not as much. So a little bit of resilience, very possible. Short-term looks negative, but mid-term, after a secondary reset of whatever caliber it's going to be, the 14-day RSI moving average is still moving up on just about every chart. So that has to be taken into account and realize that at least for the moment, the overall trend is still up. So we'll see how far this goes down and when it turns once again. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.